Good evening to all of you. This is Ranjan from smartfinancein.com. And in this particular video, I am going to describe two things. The first thing, the monthly depth, market depth, Nifty depth, what we are releasing every month in our group. So those calculations, I am going to explain how this calculation is happening. And already, if you are a member of this group, you can able to learn. Old videos are there. And if you are not a member of this group, then view the description box. I have given the link to join the group. So here, this we have done on the first trading day of December. So there, I have told you, the first day's Nifty spot closing was 24,276. It made a low of 24,008. I told you above 250 it will set the uptrend and it will confirm based on the Fibonacci. 24,400 above it will confirm the uptrend. Then after it will move to the higher orbit and the depth for the month will be the 1027 point. So this is what I have done in the first day of the December trading day, end of day we have mentioned. Today also I have allotted. So already out of that 1026, 640 point depth is created. If Nifty closes above 24,815 and close above this, it will have a move till 2535 to 25,270. So this is what we have mentioned allotted. So how this calculation happening? It's a very easy and simple calculation. First day's closing VIX we are taking. So index is having a VIX. What is the closing VIX of first day? Nifty we are taking. Again Nifty spot price we are taking. First day's closing price. From this VIX we are just finding out the daily VIX. So I am dividing the VIX with the square root of 365. Then after this calculation 0.77 it has come. Then this 0.77 I am multiplying with the square root of 30, multiplying with the closing price of the Nifty on that day. So by this process I am getting a big number. So it is telling that 102,638.577 something is coming. However, this VIX is a percentage term, so I am dividing it by 100. So getting this 1026 points. This 1026 point, I am multiplying with various Fibonacci ratios. I am getting different price range. And this price range, I am adding with the first day's low to get all uptrend forecast. Similarly, whenever the high is being made, I am subtracting it from the high and getting the support price points. Similar logic I am using in the closing price also. So whatever the first day's closing is there, in that I am adding the price range computed from here, and I am getting one more set of uptrend, one more set of downtrend. So this is what we are doing, and this depth says in the month of December, whatever the high will be made, low will be made, it will have a minimum difference of 1026 points. And it is being observed in the past 24 months data. If you take in this order, 21 months it has accepted this calculation. Either it has given that exact that much of depth, and many times it has given more than the depth, and only 3 months it has given less than the depth. So it has a great accuracy in this form. And based on this, you can have your trade strategies, you can optimize your trade strategy, you can have your hedging strategies, many things you can able to do. So very idea is, if there is a 1026 point of oscillation is going to happen, how I should plan my trade from the beginning so that I should capture at least 25 to 50% of this depth. That should be your idea. That should be your trading strategy. The first day itself, you are knowing that there is a 1026 point of oscillation is going to happen. So and where the uptrend is sitting and where the downtrend is sitting, or which price point is giving you uptrend confirmation and which price point is going to give you the downtrend confirmation. If it has come, then using this depth, you can capture 25 to 50% of this depth into profit. So for that, this study is very, very important. So this is my part 1. Second part, nowadays you will be seeing that your crypto market is booming. Lot of cryptocurrencies are moving forward. Bitcoin also, you can see that now we are recording this event. It is gone to 1,02,471 USD. So this is a asset. As a trader, you must involve yourself, but you need to know how to involve yourself. So for that, I have organized a webinar. It is not a free webinar, it is a paid webinar. One small token fee is being kept here, 354 rupees for first 50 registrations. Then after it will be 590 rupees. It will be a 6-session program starting from 21st December. So it will be in the English and Hindi. English session will be on the 21st December, 28th December and 4th January. 3 hours. Hindi also 3 hours. You can join both or you can join anyone. It is your choice. We have not kept any restriction. You can join all 6 sessions or you can join only 3 sessions based on the language what you understand. What I am going to describe here, that is very important. 12 very important concepts will be discussed here. First, I will be starting with how volatility can be added with Fibonacci study, Elliot study and Gann study. Those who are the old participants, they will be knowing this is our prototype technique. This is our copyright protected technique and this is our unique technique for intraday and positional trade analysis. Smart finance unique technique. Most of our softwares are based on that. Then I will be telling how Fibonacci, Elliot and Gann principle you can use in crypto and stock and commodities in a different way. So these 3 instruments having different behavior. Crypto is a global instrument. 365 days it trades. 24 hours it trades. Its nature of market is different. Entire world's people are involved here. Not only Indians. Indians, Chinese, US people, Europe people, everybody involved in the crypto. So it is a different instrument. So for this different instrument, you need to do an analysis in a different way, which is not local specific when it is a global specific, and most of the cryptocurrencies having a very huge volatility. They are 50%, 60% annual volatility. So those points, how you can handle, how you can use the study, that you will be learning in this program. I will also take you to the crypto's futures and options. Those who are knowing about that, it is good. Those who do not know about these things, you will know about what is crypto futures and options. You can also trade in the crypto futures and options. Fourth most important thing, how to form a pair trade and option strategy in crypto and commodities. So already we have innovated many pair trade techniques, beta decoupling, Z score, all those things, how you can use that things in the crypto pairs and in commodity pairs. Fifth, why technical study doesn't work in crypto analysis. Many crypto coins never accept the technical studies to 100%. Or 50% also they don't accept. The reason is it is a global instrument. All cryptocurrencies volatilities are above 50%. So such a huge volatile instrument may not honor all your technical studies. 6th point, we will discuss about what is the taxation risk investment principle in the crypto. 7th, we will understand the crypto and commodity option in detail. How you can do a open interest analysis in that. What is the different modality of option studies are there, what type of options there are exotic options. So what are the best option strategy you can implement in the crypto options, that also will be our part of discussion. how you can use different Gann studies in the crypto analysis and how it is different from stock and commodity analysis, that also will be discussed. Elliot studies, how you should do, that also will be discussed. And crypto is a very high volatile instrument, how you can handle the volatility. It moves in 20-25% up, sometimes 50% down and all. How you can handle that. That also will be part of our discussion. 12th point, how you can devise a crypto investment and trade strategy to earn big money. So when I talk about big money, it is too huge money. You can earn that. But that will come with an intrinsic risk, huge risk also. How you can devise a strategy so that your risk will be minimized, same time you can earn a big money. So all these things we are going to discuss in this 6 days program. And as you know, Smart Finance never stops anything in their program. Our courses and softwares are different. It has a price tag. It is being given here. Those who are intended audience or those who want that, they can buy it separately. We never stop any of these things that give us 5,000 more, we will give you some bonus, this, that, nothing. All these stops, whatever I have mentioned here, that will be only taught to you. And if you have the interest to know all these things, please register for this program. And program fee, already I told you, it is 354 rupees for first 50 registrations. Then after it will be 500 rupees per registration. It is just a token money I am taking so that the crowd should not be more. So the group should be small and they should actually learn some stocks. So this is what you can get in this program. And do use this particular VIX-based method and take maximum benefit out of that. Thank you very much. Thank you for your time.